I have been asked to do a short video as so people who would be watching the software would get some basic understanding as to what actually they are seeing and how everything interacts uh, with everything else. Anyway, it is presently just before 7 a.m. the 21st of September. And basically, you're going to find when you look at this page, you're going to find the date somewhere, and it is Monday, uh, September 21st, 2015. And the first window we'll try to cover. I'm going to move this out of the way for now. Just move it over there. The first window I'm going to try to explain is what's known as a price ladder. The price ladder gives up to the moment price information about whatever we are trading. Right now we are trading the ES, which is the S&P Mini, E-mini, for the September, what's actually the January contract, which right now is trading at this moment at $1,955.25. These prices come directly from the Chicago Board of Trade in Chicago, and it's real time as trades happen. This gets reflected in this price ladder. This this number 12 represents a limit order that the software that we developed has placed on the price ladder. It's a limit order, meaning that it will not be executed. These 12 contracts will not be sold at this moment. We are selling into the market. The software feels the price is getting a little extended from its action this morning so far, so it placed an order to sell 12 contracts. It's part of a bigger order. The first order was placed at 1952.25 for 6 contracts, and when the order is executed, the system automatically puts out its targets. If we are selling on this side, which we did here at, it keeps going back, let me set this up, a little easier to watch. This freezes the price ladder for me. When we sell contracts at a specific price, the software sets out its targets as to where it thinks the price should go and where we will make some money. So earlier today, we sold 6 contracts. Gets represented here, but we'll stay with one window at a time. And here are the targets. The price did not go in the direction we originally initiated the trade for, but the software, what it does is calculates its next level as to where it wants to place its next order, so it can average in or pyramid in or scale into a trade, and it does this all day long. Okay, so what you're seeing is that kind of explains what you'll see here is the 12. We already did 6, and we have our targets. When this 12 gets taken, new targets will be set up, and it will just continue to place orders and have target hits get hit, and you can see how this works from all these little bubbles here that I'll explain in a little while. Anyway, back to the price ladder. Right now, the last trade, I can tell by looking at this, was at the price of $1954.50. Right now, there are 71 contracts, 70 contracts. These numbers keep changing and updated momentarily as they happen. And you can see right now there are 60 or 64 62 contracts that are available to be bought. People want to buy this number of contracts. As you can see on this side, this is what's for sale at this moment. Right now they're selling 23, 19, 34, 43. So this constantly changes as the day goes by. This is the red is what's for sale, the blue is what people want to buy. And that's how trades are executed. If somebody wants to buy 1, 2, 40, well, how many contracts, they are for sale right here. And this represents this little quote in parentheses, this number in parentheses. That tells you how many contracts are actually being bought at this level. Right now there has been 90 contracts bought at this level. You can see, and then it jumped up here because it traded one contract at this level, so that became the new number in parentheses. So what you're watching here is not only the price coming in, but how many contracts are actually being sold at that moment at that price. And here we are, we're still sitting with our 12 contracts. If it gets up there, we will our contracts order will be filled. And as it gets filled, and this gets added to our inventory of contracts, you can see up here it's represented that we have 6 contracts. We are short, in terminology, we are short 6 contracts at an average price of $19.5225. So we paid $19.2255 for them 6 contracts, and that's represented also down here, $19.5225. We are going to sell 4 at $19.5175, 1 at $19.50, and the last contract at $19.4975. How we make money is every time when the price travels from, as an example, from 1954 to 1955, there is 4 levels of prices and broken into quarters. Each time the price moves 1 tick is what they refer to it as, from 1954.50 to 1954.75. That's considered, the difference is referred to as a tick, 1 level in the price. Each level in the price in monetary value is $12.50. So if you have 1 contract and the price moves 1 tick in the direction you want it to go, you've made $12.50. Or if it goes against you, you show a paper loss of $12.50. $12.50 for each tick represents $50 for each point. So if it goes from 1954 to 1955, that's $50 when you're trading the ES or the S&P E-mini. If you have 6 contracts like we have, okay, you see that some of the orders were taken. It was taken at different levels. The software moved its average price up a little bit because that became the new average price. And then new targets were set. We are now short 18 contracts, no longer 6 because we got filled with 12. Our new target, our new average price or scale-in price is 1954.42. That's the actual, what's represented here and rounded off is 1954.50. Okay, so we're short 18 contracts, meaning we sold 18 contracts that we don't own. We borrowed them from somebody, but I don't want to get too into the weeds. But our position is we have to buy back 18 contracts at a profit. And you can see how the targets were moved up. Now we have 11 contracts that we're looking to purchase at 53.75, 4 at 19.53, and 3 more at 51.75. How much money do we make is shown, or how our position monetarily is shown in this little window here. Right now we're up $2,900 from the trading we did since midnight last night. These numbers get zeroed out and start a new tally at midnight. So since midnight last night, we've profited so far $2,900, and we traded, this number here is 57 contracts. That's closed, that's bought and sold, or sold and bought, but that's so far our profit. Our profit moves up and down as the price ladder goes up and down depending on our position. At the end of the day, this gets represented and gets added to our total for the day, or for the week, or for the month. There's a lot of different buttons and different actions that can be taken, and there's no real need to get into that at this point. This is just an explanation of what all these numbers represent. When an order is given or an order is placed, it gets represented right here. As you can see, we have our 11 contracts. Right here is 11 contracts at 1953.75, and that is that order right there. So this is just your order book. It tells you what orders are out there, what our position is. We're short. Okay, we just placed another order for 47 contracts to sell again at $60, 1960.75. So this is constantly in motion. It's dynamic. It's always moving. These are real prices, and you can see how the software automatically sets out different prices at different levels and different targets. These, I'm going to move this back to where it was, kind of out of the way. These are the orders that were filled, and you can see that the order was filled. At this moment, we sold, which you saw, the 12 contracts. We were originally short or sold 6 contracts. The next order we sold 12 contracts, and these are the different prices they were executed at. This is our position at this moment. When we sold those contracts, we were short 6, or we sold 6 contracts. And when this was done, when this action was taken, it shows the profit at that time, which at that time, when these 6 contracts were sold, we were ahead $3,875. These are numbers that just move, and I'm just trying to give you how a picture, an overall picture, how everything integrates with each other. Okay, we're up here at the chart. This here is a representation of where the price has been over a period of time. Each one of these markings here, the blue and the red, is a 15-minute period in time. So each one of these represents the price movement for the 15 minutes. Let me see if I can bring this back. This here opens it up more or closes it, but you can see how far back this goes. These were all trades that were placed since last night, all of these little bubbles. This was the first trade we bought. The blue represents a buy, the red represents a sell. So you can see how not only are we keeping track in the order book, but the chart is also getting notated as to where and when the trades were actually placed. To make it a little bit shorter video, you can see how the trades from midnight last night, not midnight, 6 o'clock Sunday evening is when the market opens for the ES, the S&P E-mini. Of course, it trades around the world, and it trades from Sunday evening at 6 o'clock to roughly 5 o'clock Friday afternoon, the following Friday, and it's shut down for the weekend. But this is where we are. All of these little, we call them bubbles. The reds are sells, the blues are buys, and these candles, they call these because they look like candles with little wicks on them. You can see they look wick. These little lines are considered a wick, and this is a candle, referred to as a candle. And you can see the price movement, where the price went down or price went up, but it doesn't matter. If the price goes down, we are buying. If the price goes up, we are selling, and we just take advantage of all these little vibrations. I call vibrations in the market price. It's really price movement, and we sell when the price goes up, and we buy when the price goes down. Now, how do we know where to buy or where to sell? Software calculates through prior days of price action and places what it considers turning points in the market, where the market should turn on at the price levels. And you can see it builds a position, and it really is very accurate. But these lines that you see going across, just to give you a quick explanation of it, these lines going across are where the software feels it represents on the chart, where the software feels it should be buying or it should be selling. You see R0 right there. Let me see if I can open that up a little bit for you. Yes, okay. R0 would be resistance, or its turning point. It feels its turning point should go down if the price gets up there. And you can see how it worked last night. The price went up, got to R1. It sold more into the position. It added to our position. It moved up our averages, and then when the market turned where it should, it started to get out. And you can see how it just went flat here, did our buying and selling, and we made some money represented down here. And now we are doing it again. We're just repeating the process. So if the price gets up to, here would be 1960.75, we're selling more. And that would be the next level. That would be R2. So it's really not as complicated as it may seem. It may seem overwhelming. This is the prices that are represented as to where the price is actually trading, coordinated with this price here. $1,957 was the last trade. You can see it right there, 1957. This is the time of day. It's set on a 24-hour clock. This is New York time. So right now it's a few minutes after 7 in the morning, and you can see that there. And it's just building another candle just to represent the price. And this is the volume of how many actual trades were done at this candle here, or this time frame. And you can see how it was a lot of volume here, but as this is actually Friday's trades, and this is Sunday afternoons, and this started again at 6 o'clock. So, and you can see the volume, how it just tapers off, and that's what all of these lines are. This is the open at 9:30 in the morning last Friday. And you can see how the volume really kicks up on New York time when the market opens, and then around the world, China, Indonesia, Europe, it slows down a lot. So that's basically it. I hope I've answered a lot of the questions. I hope that when you do look at this, you can kind of understand a little bit more about what you're seeing. I'm always available for more questions. So I think that we're just going to call that enough explanation for now. I don't want to confuse anybody, and I want to make it effective for you. We're going to make this video available to be watched in as many times as you need. Have a good day.